XRP ETF inflows are surging at an unprecedented rate, yet the token's price remains frustratingly stagnant. Could this be a deliberate market ploy designed to mislead investors? Let's dive deep into the dynamics at play and explore why this apparent disconnect might signal something far more strategic in the world of cryptocurrency. Hey guys, welcome back to Whiteboard Crypto Update. In today's video, we will talk about XRP. So be sure to stay focused, as you surely don't want to miss out on this. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads. Please remember, this is not a financial advice video. To understand the current landscape, it's helpful to draw parallels with the early days of the internet. Back then, pioneering platforms like Napster and LimeWire burst onto the scene, offering revolutionary ways to share music and files. These were innovative, user-focused tools that captured massive early adoption by appealing directly to individual consumers seeking free, unrestricted access. However, they operated in gray areas, often skirting legal boundaries and lacking the infrastructure to scale sustainably. As a result, they didn't endure. Instead, giants like Google and Amazon emerged victorious by prioritizing structured, compliant systems that aligned with regulatory frameworks and catered to broader institutional needs. These winners didn't chase quick retail wins. They built foundations that could integrate seamlessly into the established economy, attracting massive user bases through partnerships and reliability rather than rebellion. This historical pattern mirrors what's unfolding in the cryptocurrency sector today. Many projects have rushed to engage retail users with flashy apps, meme coins, and decentralized experiments, aiming for viral growth among everyday individuals. While this approach generates buzz and short-term speculation, it often overlooks the real engines of global value transfer: major financial institutions, corporations, and businesses. These entities handle the bulk of worldwide transactions, moving trillions on behalf of clients, governments, and economies. Retail users might tinker with wallets and trades, but the true scale lies in institutional flows, cross-border payments, settlements, and treasury management that demand speed, efficiency, and above all, compliance. XRP and its ecosystem stand out precisely because they've adopted a different playbook. Instead of targeting end users with speculative gimmicks, the focus has been on collaborating with banks, payment providers, and regulated entities to solve real-world problems. By integrating blockchain technology with the needs of these powerhouses, such as faster cross-border transfers and reduced costs, XRP positions itself as a utility tool rather than a hype machine. This strategy echoes the success of internet victors: build for the big players, and their vast client networks follow naturally. Imagine selling a solution to one major bank that serves millions of customers. That's exponential reach without the chaos of direct retail marketing. In essence, XRP isn't about disrupting the system from the outside. It's about enhancing it from within, ensuring that innovation aligns with the regulatory realities that govern global finance. A recent development underscores the strength of this approach. A new ETF monthly report highlights Ripple's ongoing pilot program with MasterCard as a game-changer, positioning both entities with a significant first-mover advantage. Unlike competing initiatives such as Visa's experiments on Ethereum or Solana's integrations with platforms like Shopify, this collaboration emphasizes compliance and regulatory alignment from the ground up. The report explicitly ties this to potential increases in XRP demand, noting how it creates a compliant pathway for institutional adoption. This isn't just another partnership. It's a validation that building with risk management and legal foresight in mind trumps unchecked experimentation. Why does this matter for XRP specifically? It reinforces the core thesis that sustainable growth in crypto will come from institutional integration, not retail frenzy. Financial giants like Bank of America or JP Morgan are eager to leverage blockchain for efficiency gains, but they won't compromise on compliance. They'll choose protocols that offer built-in tools for monitoring, reporting, and risk mitigation over those that require them to retrofit decentralized chaos into their operations. While the broader crypto community once dismissed this institutional-first strategy as overly cautious or selling out, the evidence suggests it's the smart path. Speculative retail deals might spike volumes temporarily, but conquering the world's largest value pools requires solutions tailored to those who control them. This report serves as a strong endorsement, proving that focusing on regulated enterprise-grade applications isn't a detour. It's the direct route to mass adoption. Shifting gears to the present market action, XRP ETFs are experiencing an impressive streak, 6 consecutive weeks of positive inflows, totaling between $1.2 billion and $2 billion. This influx represents institutional confidence pouring in, with no outflow days recorded yet. Such consistent buying from sophisticated investors typically signals bullish momentum, yet XRP's price chart tells a different story. It's hovering in a narrow range, showing little upward traction. This mismatch has sparked widespread confusion. If billions are flowing in, why isn't the price reflecting it? The answer may lie in classic market dynamics often seen in emerging assets. Consider the broader context. A new CFTC chairman is assuming office with a clear mandate to advance crypto market structure legislation, aiming to deliver comprehensive bills to the president's desk. This comes amid a wave of pro-crypto signals from key U.S. regulators, including the SEC and OCC, all pushing for frameworks that integrate digital assets into the mainstream financial system. Major institutions worldwide are ramping up their crypto involvement, from custody services to trading desks, recognizing the transformative potential. Yet amid this optimism, whispers of a bear market persist. Prices dip modestly, support levels hold, but the narrative shifts to fear, sell-offs, downturns, and doubts. This could be interpreted as a sophisticated head fake, a temporary illusion designed to shake out weaker hands before the real upside materializes. In markets still relatively small and illiquid compared to traditional finance, influential players can influence price action to accumulate positions quietly. By fostering doubt through sideways or mildly bearish movements, they divert attention from the fundamentals, like surging ETF inflows, regulatory tailwinds, and institutional buildouts. It's no accident that this stagnation coincides with monumental shifts. The U.S. is poised to emerge as the global crypto hub, with legislation that could unlock trillions in capital. Ignoring these developments in favor of short-term price wiggles misses the bigger picture. Financial institutions aren't deterred by a 2% weekly dip. They thrive on it, using volatility to position advantageously. The real value movement happens behind the scenes, in boardrooms and policy meetings, not on retail trading apps. For XRP, this setup is particularly compelling. As a token engineered for cross-border efficiency, it stands to benefit immensely from clearer regulations. ETFs act as gateways, funneling traditional capital into the ecosystem, but price suppression might be the last barrier before liftoff. History shows that assets on the cusp of breakthroughs often endure these shakeouts. Early doubters sell, institutions accumulate, and adoption accelerates. In summary, the skyrocketing ETF inflows juxtaposed against a stuck price isn't a red flag. It's a potential green light for those who look beyond the charts. By emulating the disciplined, compliant paths of internet winners, XRP's ecosystem is primed for institutional dominance. The MasterCard pilot and glowing ETF reports affirm this strategy's edge, while incoming legislation promises to catalyze demand. Well, guys, that's all we have for you today. What are your thoughts on XRP? Get involved and let us know in the comments down below. If you guys like this video, then be sure to give this video a big thumbs up. Thank you for watching, and we will see you again in the next video. Goodbye.